Okay, we are going to be presenting the results of up to end of February 2015. As SacOil, we've gone through a very tough period, or at least the oil and gas industry has gone through a tough period of plummeting oil prices. So for us, we had to re-strategize, look at our business model. And what we've done is we have reviewed our strategy, where we now begin to focus more on cash-generating assets and move away from, high cost, high risk exploration assets and focus more on development and production assets. We've acquired a production asset in Egypt. We are currently developing the field, and we expect to produce up to 1,000 barrels per day by end of 2015. With 1,000 barrels per day, it's a fairly low-cost operation onshore. We've got low-cost overheads, so we should be in a much stronger position next year in terms of cash flow. We've also implemented what we call portfolio rationalization. We exited our high-risk, high-cost assets in Nigeria, and that's really part of moving away from exploration and balancing our portfolio and having exploration and production assets within our portfolio. That process has ensured that the material uncertainty on the going concern of the company has been removed. We are a going concern. We are liquid. We are cash positive. Currently, our cash position is 229 million rands. With our portfolio rationalization, we also expect more refunds from Nigeria. And that will significantly increase our position. We don't have any debt, in our books, which is very good for the current low cost, or low oil price environment. You need to conserve cash that you have, develop the assets that you have. We also have a very interesting venture in Mozambique. In Mozambique, we are developing a gas pipeline and a gas processing facility to distribute gas from the gas finds in Mozambique. Again, that is quite strategic for the company, for the country, for SADC as a region because of the shortages of energy. Look, in this reporting period, we are going to announce very significant losses, to more than 200 million rands of losses. But those are primarily non-cash items. It's purely because of our portfolio rationalization. We had to take a position and say we expect some of the refunds on the money that we spent in Nigeria. What is the likelihood of getting all those refunds? Some of them, yes. Some of them, partly yes. So we had to write down some of the assets. We had to impair some of them. Again, with the oil price being 50% lower than what it was last year this time, we had to also look at the valuation of the assets. So it's a significant loss, but overall, with our new strategy, cash positive position, being a going concern, and also having a cash generating asset, I think we're in a much better shape compared to last year. And finally, I would say that as a company, given the new strategy that we are looking at, we expect significant growth. With no debt, we are in a much better position to do M&As. And that's part of our short-term strategy of balancing our portfolio, focusing more on production and development assets, like we've done in Egypt. So we're on a lookout for more of those type of assets in Africa. So from a shareholder and investor point of view, we've fixed the fundamentals, we've reset the base. We are saying here we are as a company, we have money, we have cash flow. We're looking at assets that are going to increase the reserves, that are going to increase production. And so we expect, with those decisions, for our share price to follow those fundamentals accurately, as compared to previously where it was more speculative, based on exploration assets that were risky. You don't know whether they're going to deliver production or not. But with the new refocus, I think the new SacOil is looking much more positive.